Hey everyone, this is Kirk here again at Option Alpha, and this is the members only video update. It is really early here on Monday, August 22nd, about 6 o'clock. Already done a post for the day, so now just working on a video for you guys. What I wanted to do in this video is go over a couple things. I don't want to make it too long here, but I did want to touch on some major strategy things and thoughts for the coming week and really kind of finishing out August here. The past 2 weeks have really been quite crazy for the market, and I'll just go over here to the chart. And I mean, of course, you can see and you know that, I mean, we just took a nosedive over the past 2 weeks, but I think we did pretty good for August. I think we could have been a little bit more nimble on some of our positions. We could have been a little bit more conservative now looking back on things. But I can tell you that where we ended up in August is way better than some of the other newsletter service providers that I know of out there. And again, I'm not going to point any names or call out anybody, of course, but I have been sent numerous email messages that have been forwarded on to me just showing some of these other options trading services, especially weekly options, that just got absolutely blown up. I'm talking 40, 50, 60% losses on some of their positions. And really just goes to show, again, that you got to be really conservative in this market with a VIX that was so low, back under 20 just about a month ago now. It's really not advantageous to be selling weekly options every week because of this type of scenario that can blow up a portfolio. And even if you are selling options, you got to be far away. And I think that we did a pretty good job. Obviously, this was kind of a, you know, not a one in a million, but it was a pretty rare event that the market would drop so fast, so dramatically. And we still did very well. Our SPY positions, our OIH position, GLD were all good. The IWM was a little bit tricky getting out of it just because of the last little 5% dip on Thursday before the Friday expiration. But overall, I think we did really well. Very proud of what and of how we reacted to the market. I think we could have done a little bit better as always. There's always room for improvement, but I think that things are looking good right now. And of course, I'll go through all of our current positions for September in a few seconds here. The thing that I did want to point out, as far as indicators, I really like this chart that I found just kind of scanning through things over the weekend. And this really gives a good indication of where we are, relatively speaking, with other major bottoms. The dot-com crash, the 2009 bottom, obviously. There were a lot of indicators over the weekend that were really flashing kind of buy signals. And if we're going to be emotion-free traders, then we need to kind of sort of act on those buy signals. Not completely. We don't need to fully invest all of our money. And like I said to you guys last weekend, I think that's really good to keep some cash on hand because there are some great opportunities with the VIX this high. And if the VIX continues to rise, then we want to have some room in our portfolio to, one, withstand the fluctuations in margin, but also, two, take advantage of some of these great trading opportunities. I think that this is a really good chart just showing how overextended we are. It's hard when the market is running down so fast and volatility is up and fear is up to lose yourself in the market antics and the day-to-day and the news stuff. And you just have to step back once in a while and take a look at some of the major indicators and see, relatively speaking, where we are. So you can see that right here, we're at a level now that is similar to where we are at major bottoms. So again, the market's pretty much sold off really good here. I think that short term we should see the market have a strong rebound. And I've sent out that chart a couple times before to you guys about the correlation between the Dow's 2008 2009 market top here, where you can see the market had a quick sell-off, and then a couple months of trading in between. And if we go over to the chart this year and this market top here, you can see that we've had roughly the same thing happen. I mean, it's been almost lockstep of what's happening. So if the theory continues to play out, then the market will trade fairly sideways to higher as we head into September, October. and then after that start to really roll over. So I think we have a good opportunity now to take advantage of the low or high VIX right now, low market obviously, and sell some really good premium on the major indexes. The IWM position that we had, this is just a classic example of selling really good premium. You can see that 55 strike is more than, well, I say more than safe now, unless we get another 10-20% drop, but a pretty good distance away from the market. It's not real close to the market, so we're not kind of playing the market trend, but we're playing volatility here. So even a big slowdown in volatility or move down in the VIX is going to really help this short position here. And of course, it is below, and this was one of the major points I made when we made the trading alert, this is below a major support level going back to July and September of 2010. So should the market continue to fall, then we should find some support right here at this level, which is above our strike price. You can see that the market already is bouncing near old resistance level that's now acting as support. So as long as we stay around this area, that's going to be good for this position in the market to run higher. We definitely have a lot of room to go on the market. You just look at the IWM and the Russell, and you can see that major support isn't really until you get all the way up here. Whoop, my charts are acting up here. Isn't until you get all the way up back near 77 on the IWM. So we definitely have a lot of room that the IWM and the markets can run. It's the same thing across most of the charts. You look at the S&P, the NASDAQ, etc. Lots of room to run back up. The S&P could run all the way back up to 1250, which would be really good for short traders as another opportunity to get in short on this market. I think the overarching theme for our portfolio for this month is going to be to have a couple positions, a couple good positions, and then wait. I don't want to overextend ourselves. I think that last month we did a good job not adding a bunch of trades as the market was falling, and that gave us room to make adjustments as needed. And I think the same thing holds true this month. So it's always better to step away from markets like this and kind of trade here and there when good opportunities present than to try to pick every little top and bottom and trend and kind of fight back the losses if you had any losses. I think that that's going to be the theme for us. I know that we have already one RUT position that is fairly close. Futures are rising this morning, so I think for this position and for the DIA position that I'll show you in a second here, that the best thing we're going to do right now is just wait for the market to have some sort of little rebound here and then look to either roll the position out, just give us a little bit more room for any more fluctuations. But of course, we'll take it day by day, and I will always update you guys on these positions. The DIA, same thing. The DIA is a little bit close. We entered this position just before the market fell. So we had a lot of room already baked into our position, which is good and has helped. And you can see that we only had one piercing day that broke below our strike price. So again, we'll wait for the market to have a little bit of rebound. Again, futures are up almost 1.5% this morning, which is good. And then roll that position out just a little bit more. I think the thing that I always tell people when rolling options is that I don't want to roll them too early, obviously, because then the market can fall and we have to roll again and again and again. But I also don't like to roll them with such a high VIX. The VIX is so high right now, so premiums are really swelled. I'd like the VIX to come down just a little bit more so that when we do roll the options, we're not paying an arm and a leg to buy back the first position before we roll out to the next one. So that's my strategy for the week, for this portfolio. I'd like to add at least another credit spread before the end of this week and one more naked put call position. Obviously, it's going to be more on the put side. I really like SPY, OIH, and USO. Those are my big kind of charts that I'm looking at right here. USO, that already expired at 120. But some of the options down here at 100 are looking really good. SPY, same thing, something around 90 is looking really good. So we'll just have to take it day by day and see where things kind of go here, obviously. But it's been really good. Hopefully these videos are helping you guys. And as always, if you have any questions or comments, just post them to the members area. I'm still trying to get the forum loaded up into the members area. We've had some complications with the WordPress theme and everything, but hopefully by the end of this month we'll have the members forum updated, and I think that's going to be really great, so everyone can start sharing ideas and posting comments. It's going to be a really, really great feature. So as always, I hope you guys enjoy this, and happy trading.